All right, so let's go ahead and get into our conversation for tonight, everybody. I don't know how many of you have, but I know I have been getting tons of calls from people, my friends. They're like, girl, you better go ahead and get you some Amazon. That stock split's about to happen. And how many of you guys sometimes when things like that happen and people are talking about things in the news, you're like, okay, should I buy? Should I really buy? Or you go and start buying stuff, but you don't really know or understand why or what it is or why it's important or if it's even a good move as far as investing. And so for me, because there were so many people talking about the stock splits, I know people are probably talking to you guys about it as well. And one of the really big visions of this team is for you guys to really be educated about investment. So when somebody comes to you and say, you need to do this, I want you to be able to have educated ways of responding so that you know whether or not you should do that on your own or just take somebody else's advice, right? So tonight we're going to talk about understanding stock splits. We're going to be going kind of high level with it. And the reason why we are doing this at this time right now is because we have some really big stock splits coming up. Amazon, I apologize, Apple is not one of them, but Amazon, Google, and Shopify are three of the biggest stock splits that we're going to have within the next couple of months over the course of the summer. And so they're the ones that everybody's talking about right now. So I want you guys to really understand what it means when somebody says a stock split, okay? And so what I tried to do with this is also, because I figured with this, if my co-hosts, if y'all could help let people in, I would be so appreciative. I kind of wrote things out in case you guys wanted to like take pictures and go back and reference and things like that on your own, okay? So what is a stock split, and then why is it important? Why would a company even split their stock in the first place, okay? So just the actual term for a stock split, okay? A stock split is an adjustment of the total number of available shares in a publicly traded company, okay? So for example, Amazon has the 20-to-1 stock split. So what that means is every person who currently owns a stock for Amazon, everybody who owns one share of Amazon stock, they will now own 20 shares, okay, after this stock split. So it is an adjustment of the total number of available shares. If y'all can help me let people in, please, that would be so great. Thank you so much. All right. Now, the number of available stock changes, but it doesn't dilute the investment. All right. It doesn't dilute the investment. All it does is increase the number of shares, but it's actually going to lower the cost per share. And as a result, shareholders own more shares, but the value that they own actually remains the same. Okay, so I'm gonna say that again. So all these people who are like, you gotta get it, like as if you're gonna somehow own more of the company, that's actually not true. All right, you are going to own more shares, but the amount of money the value of that company that you actually have is going to remain the same. All right. So you want to think about it like a pizza, right? And I always say like a large pizza versus a medium pizza, I always say is the biggest crock of you know what in the world, because all they do is take the same pizza and they just cut it in smaller slices. And so it's kind of the same thing with a stock split. They're just cutting it into smaller slices. Okay, if you guys do have questions that come up, just put it in the chat, okay? All right, so what happens when a company actually goes through a stock split? The stock splits, right? It's gonna break the outstanding shares into a ratio that indicates the amount of the current shares will be broken into. So for example, a lot of times when you see stock splits, it'll say 2-for-1 or 5-for-1, or like Amazon, for example, that's coming up, 20-to-1. So what that basically means is if you had a 2-for-1 stock split, a person who owned one share would now own two after the stock split. A person doing a 5-to-1 stock split, if they owned one share before, now they're going to own 5. You guys understand that? Okay, so how does that look number-wise as far as investments? What that means is that if a company's stock is worth $500 and you own a whole share in there, if a company's stock is worth $500 and you own a whole share in there, and then it does a 2-for-1 stock split, that means you now own 2 stocks that are both worth $250. So you guys see what I'm saying? So the value doesn't go up, just your amount of shares goes up. All right. Some brokers do have fractional shares, just so that you know, but for the most part, we're talking about whole shares. Okay. All right. So why would a company do a stock split in the first place? Okay. That's one thing that you really need to know, because a lot of people really don't understand it. So that's why they're kind of confused. So number one, accessibility. That's the number one reason. So sometimes when a stock price becomes too high, investors might get a little bit nervous about actually purchasing that stock, right? Or if they feel like, well, I can't afford to buy a whole one, okay, so I'm not going to invest in that at all. How many of you, because we all, invest in crypto, how many of you have ever had somebody say, well, I don't have, when Bitcoin was $60,000, I don't have $60,000 to buy a whole Bitcoin. And like, you're like, oh, you could buy a share, like you could buy a part of a Bitcoin. Well, this is where that kind of comes from, right? Because a lot of people think you have to be able to purchase the whole thing. So some people are like, well, I can't purchase a whole share for 2,151, for example, which is the price of Amazon today. However, when they do their 20-to-1 stock split, that means the new price is going to be $107.55. How many of you then would want to actually own a part of Amazon? Because it feels accessible, right? So the number one reason is accessibility, right? They're going to put more shares out there so that more investors can actually invest. The second reason why a lot of companies will split is so that their employees can manage their shares better, okay? So for example, some companies will offer stock options, right, to their employees. And so if each share is $2,000, right, and somebody says, hey, I want to sell my share, but I don't want to sell $2,000. I just want to be able to sell maybe a couple $100 out of one of my shares. Now they have the ability to do that with the stock split, because the stock price is actually a lot lower. Everybody get that? So employees have a better opportunity to manage their own shares better. Okay. Now, there's another thing that you guys should understand, because we all trade in the foreign exchange market, right? We guys know that we trade indices, right? So to qualify to be on specific indices, some indices require that companies have a lower share price to be able to be included. For example, the Dow Jones, right? And so if they can be listed on more indices, then it gives access to more investors, which obviously that's what companies want. They want people to invest in the company. Okay. And then the fourth reason is notoriety, right? Look at how much press and how many people are talking about Amazon right now because of the fact that they're about to go through a stock split. All right. So one of the things is it gets the company's name out. It gets people interested in actually, putting money into the company. And then also the notoriety is that, when a company can say, hey, we were able to split our stocks or our stock price, it is like, wow, look how much growth we've had. Because you have to have a lot of growth in order to be that. So it's kind of almost like a badge of honor being able to say we were able to do a stock split. Okay. So those are the four main reasons, okay? And even NASDAQ did a study that found that companies that split their stock tend to outperform the overall stock market. So that's why people will do it, all right? And so when people start looking at investing in it, a couple of things you want to know, all right? Number one, what are the stock splits that are coming up, okay? So we know that Amazon is coming up, is doing a 20-to-1 stock split. You have to own the stock by May 27th in order to participate in the stock split, okay? Or to be able to get the 20-to-1, all right? The payout date is June 3rd. So you want to make sure that you own it by May 27th, and then the payout date when you'll actually get those shares is going to be on June 3rd. Google, all right? Google has two why can't I think of the word symbols? Okay, so it could be GOOG or it can be GOOGL, and they actually call it Alphabet, which is really interesting. But Alphabet, if you will, is 20-to-1. Their record date is July 1st. So if you're going to participate in that stock split, you want to go ahead and start buying Google stock by July 1st, and then the payout date is going to be July 15th. Shopify, which a lot of y'all use with your e-commerce stores, is going to be doing a 10-to-1 stock split. You want to own it by June 22nd. The payout is June 28th. all of these dates and all of this is basically based on shareholder approval. So all of these have to be voted on. So a lot of these, like I think the Amazon voting is this week. Is it on the 27th? I think it is on the 27th. Okay, but it is this week, okay? But as many people will say, that's just like semantics. Like, it's gonna go through, right? So just so you know that, but it is based on shareholder approvals. Okay, so the big question then becomes, now that we understand what is a stock split, we understand why do companies even do this in the first place. Okay, so then what does this mean for investors? Should I buy, should I buy period, or should I buy before or after the stock split? That's the big question that a lot of people have. And the bottom line is there is no right or wrong answer. I did research, listen to this person, this investor, that investor, and what most people will say is there really is no right or wrong answer. It simply depends on your investment plan. So for example, I own Amazon, and I will probably always own Amazon because I believe in Jeff Bezos. I think he's a genius, and I think he's going to take over the world. And so no matter if it was split or not, I would still own Amazon and probably still continue to buy that stock in the future. It's been one of the highest performing stocks of the last 20 years. So for me, I really believe in that stock. So no matter what, I'm going to continue to dollar cost average and purchase Amazon. All right. Now, the bottom line is, in a perfect world, the best time would be to buy right before the announcement date or on the announcement date, all right? And then a lot of people say, if not, just wait until after the split. Why? Because when the split happens, the price is going to jump down, right? It's going to drop down. But because it's been in the news, everybody's excited about it. What they believe is going to happen usually is that the new interest and all these new people who can now afford to buy more shares of this really amazing company, they're going to drive those prices up. And so the idea is that the price is going to shoot up. And so that's where you actually get your gains. All right. Now, you can always look at what's happened in the past to kind of look to see, should I do this? And I added a little story in here that I found that I thought was really good, right? So there's a lot of examples out there, guys, where stocks have increased right in the days following the initial drop of that stock split. For example, in 2014, after Apple issued their 7-to-1 stock split, before the stock split, Apple was trading at about $645, okay, per share. After the split, the price went down to $92.70. Apple's outstanding shares increased from 861 million shares to 6 billion shares, but the market cap stayed around 556 billion, okay? So a shareholder who owned 1,000 shares, that means that they now own 7,000 shares. All right. So after the stock split happened, there was demand from the investors, right? Because everybody wants to get this stock for $92. I mean, it's Apple, for goodness sakes, right? And so the price increased from $92.70 to $95.05 per share. So an investor who owned 1,000 shares at that time, and they now own 7,000 shares, they actually saw a gain of about $16,000. Do you guys see how that happened? So they saw a gain of about $16,000. So that's why people get so excited about the stock splits, okay? And so whether or not you decide if you're going to participate in Amazon, Google, or Shopify or any of these, guys, it's completely up to you, and I would look at your investment strategy. The big reason we wanted to have this call was so that people were educated, because it's all over the news and everybody's getting excited. And I don't want somebody to think, hey, just because I get in before the stock split, that means I'm automatically about to make all this money. Maybe, maybe not, right? But you do need to know and understand how it works, okay? So hopefully everybody now has a better understanding. I'm just gonna check real quick just to see if there are any questions. No, I don't see any questions in the chat. Excellent, excellent. Okay, cool. So our affirmation for this week, guys, is I will seek to become a highly skilled in my investments. I'm gonna say that again because I said it wrong. I seek to become highly skilled in my investments. I find satisfaction in investing. I will choose to be more in control of my financial future. I have an investor mindset, okay? And the number one thing when it comes to an investor mindset is to get educated before we just randomly start putting our money into things, okay? So do your own research this week, guys. if what I talked about tonight sounded interesting to you, if you're like, man, a stock split, that sounds, now that I understand what it is and how it works, it seems like something I would be interested in, then do your own research and start looking at how you can participate. Some of you may say, hey, I want to do it after the stock splits. I want to go ahead and purchase it like right away and then maybe ride that ride up if I want to, sell it in a couple weeks or so, right? If you do want to purchase some stocks, here's a little tip for you guys. Webull has referral links. So you guys know I'm really big right now on affiliate market. I'm like, anything that we promote, you should get paid for it, okay? And so I have a Webull link. If you don't have one, listen, I'll send you mine, get you a Webull link and send it out to others, because one of the things I love about Webull right now, or what I'm loving about Webull, is that you can get 7 free stocks just for funding, just for actually purchasing your first stock, okay? So Webull has referral links, so go out there, do your own research, guys, and if you do choose to participate in one of these stock splits, hey, that's a great app that you can use. Maybe share with others what you're doing and let them know, hey, you can sign up using my link and get you some free stock as well.